Traders Corner is brought to you by IG.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, central bank governors have nowhere and never before been so prominent in our lives, and there's going to be a lot of looking ahead towards this week's Jackson Hole conference in Wyoming. And you talk about the market marking time ahead of this, so maybe let's start off tonight's show with that.
Well, that's right. It is marking time. Volatility is incredibly low at the moment. It's at like multi-decade lows. And looking at the chart of the S&P500, which is on the screen at the moment, I know I did speak about this last week, and quite honestly, nothing's changed. We could have just put the same chart up, and you wouldn't have been able to tell the difference. But what I really want to point out is the fact that obviously we've got this sideways market that's really not been doing much for the last 5 weeks or so. In fact, since the beginning of July, the S&P 500 hasn't had a move of more than 1% at all, not for a single day since the beginning of July. So that tells you how low the volatility has been. But you can see then those Bollinger Bands that are contracting over there. And I did point this out last week. When your Bollinger Bands contract like that, that is basically telling you that there's no volatility in the market. And it usually preempts sort of an explosion of volatility. Yeah. So, and I don't know whether that'll be up or down. I mean, a lot of people will say to you, well, don't short a quiet market, which is often good advice. But who knows? We've got this Jackson Hole coming up this weekend. Janet Yellen's due to speak on the Friday, I think. And we'll get more news from her in terms of what the outlook is for US interest rates. And I think once that is out in the market, then maybe we might see a little bit of movement one way or the other.
I do kind of wonder if we're all just frantically trying to find something to pin ourselves to. And, you know, that's why everyone's making this such a big deal. But, Garth, you talk about don't short a quiet market. And yet you've also got some slides of the S&P going back couple of decades, showing how September and August are generally bad months for the US market.
Yeah, I came across this slide in some research that I received earlier in the week, and I thought it was very interesting just to note the different performances of the S&P 500 on average. And this goes back 20 years now, so it's not all that long, but 20 years is probably a fairly long time to look at for an analysis like this. And basically what it gives you is the average percentage performance for the S&P 500 for each month of the year. And what you can see is that there certainly is some merit in the whole sell in May and go away thing, because if you have a look here, notice the months from May, you can see it's very, very lethargic. And then you've got August and September, which are two of the worst months of the year, back to back, historically speaking. And then, of course, you get sort of 6 or 7 months thereafter, which are quite good. So October, November, December, and then January, February are a bit dull. But March and April are typically quite strong months. So if you took this analysis and you said, well, the time to really be invested in the market is just between October and, say, April. That's when all the money really gets made. And those middle months of the year, which is typically it's your northern hemisphere summer, well, that's when things are very quiet and there's not a hell of a lot going on in the markets. But it's interesting just to note the weakness that is common in August and September. Now, obviously, we're approaching the end of August, and so far it hasn't been a bad month at all. Hasn't been a particularly great month either. It's been a bit of a nothing month, really. But anyway, the point is that this time of the year is often associated with a bit of a market wobble. So I think we've just got to be cognizant of that. Not to say that it's going to happen every single year, but this is 20 years worth of history. I think it's worth paying some attention to it.
Yeah. And what about the European markets? Because I know you also wanted to talk about the Euro Stoxx600, and they haven't had nearly as good a performance as US markets. I don't know if it's not surprising given fears of a Brexit, European banks under a lot of pressure, but is that, do you think, reflected in the chart?
Yeah, it is. Look, this Stoxx600 Europe chart is you can see it's a weak chart. This is a weekly chart now, and when I said weak, I'm implying, i.e. not strong. It's weak in the sense that you can see it's been trending lower since basically the middle of last year. And what's quite interesting to note is that last week, it pushed up against this downtrend, the one-year downtrend, which is that dotted line on the graph over there. It also pushed up against the 50-week moving average, which is this blue line over here. And you can see quite clearly last week it made a reversal week. And that comes after about 7 or 8 weeks of fairly consistent gains. But nevertheless, look at this chart and just think back to that S&P 500 chart we were looking at. All of the US indices, the Dow, the Nasdaq, and the S&P 500, are all making all-time highs at the moment. And here you've got your Stoxx600 Europe, which is 600 of the biggest heavyweight stocks in Europe across all geographies, Germany, France, and the Scandinavian countries. It's also got some UK stocks in here. So a fairly broad representation of large cap Europe. And look how far below its all-time high this market is. I mean, it's still sitting down, probably about 15% below its all-time high. So it's a very weak market on a relative basis. And if we were to go into sort of the third quarter wobble, and as can sometimes happen, then this index is probably looking a little bit vulnerable for another move to the downside, quite possibly, unless it can break up above that downward trend, in which case then maybe the picture needs to change. But for the moment, we've got an overbought stochastic on the weekly chart. We've got a testing the downtrend resistance. We've got a reversal off that downtrend resistance. So to me, all things here are shouting out caution for the near term.
And we have to, if we had to bring it back home, which we will, the European markets are probably more pertinent to the South African markets than maybe the US markets are, in the sense that we seem to be tracking them more closely than what is happening in the US, because we're also having fairly lackluster performance.
We are, but I think also part of the reason why we're having such a lackluster performance locally is because of the strength of the rand. The rand has really gained a lot of ground against the dollar, pound, and the euro, in fact. And that has held our market back significantly, because our top 40 stocks are very, very heavily weighted towards the currency-sensitive areas. And you think about stocks like SAB Miller, British American Tobacco, Old Mutual, BHP Billiton, I mean, I can rattle them off. There's a lot of these stocks that are dual listed and that are very, very sensitive to the currency. So when you've got a weakening rand, those shares do well. But when you've got a strengthening rand like we've had recently, it tends to hold those stocks back, and consequently it holds the top 40 back, which is why we've been underperforming as well.
Yeah. Gautam, what are your expectations for the top 40, I mean, from this point?
Well, I mean, the chart of it is up on the screen at the moment, and it's really been a very sideways market since March of this year. This 45,000 lateral support is still very, very key for our market, and you can see how it's held above that level on numerous occasions over the last 6 months or so. Briefly at Brexit, it popped below, but not for very long, and then it managed to, generally speaking, hold that level. But what's still very evident to me is the fact that we've got a pattern of falling highs over here on the top 40. And usually when you get a setup like that, where you've got falling highs and a whole lot of flat bottoms, what it signals is that the buyers are not really strong enough to push the market up to new highs. Sellers are coming in at a lower level every time. And usually when that thing resolves itself one way or the other, the most likely outcome is the resolution to the downside, because it's telling you that the sellers are slightly stronger than the buyers in this case. So I think we've got to watch that. What's quite notable also is that this week we got well, actually it was towards the end of last week, we got a reversal candle off of that downtrend resistance. And I think that just, to me, signals a little bit of caution as we go into the end of August and into September. Just to say, be careful. I don't necessarily think this market's going to go roaring ahead. Also, the 50-day moving average and the 200-day moving averages are both pointing down now. And quite soon it looks as if they're actually going to cross over, which is a potentially bearish sign. So all in all, this chart also, to me, is shouting out caution at the moment.
And yet, interestingly, you went long of the top 40 last week. So how has that trade played out?
Yeah, I went long in that. The reason we did that was because the market did reverse up off of the 45,000 support level that I've just shown you. And I figured at that stage, we've got an option structure in place. We've got a put spread option structure. The payoff of that option structure is there, represented with the green and red blocks there. Below 45,000, our option structure makes us money, so effectively we're hedged. And above 45,000, we only lose our premium of 891 Rand, so it's really nothing. And at that stage, we had the reversal of 45,000, and I figured, let's get long, just so that we can at least participate in some of the upside. And no, we protected at the downside anyway. So I went long of 2 contracts of the SA40 CFD. This is a product that you can get at IG Markets. And the 2 Rand per point contract is the one that I've traded here, and I did 2 of them. So effectively, I was long 4 Rand per point at 45,167. And I said I would run that up as long as the market was looking okay, moving to the upside. But after that reversal that we got last week, and it was last week Friday that occurred, I decided to bank that profit. So I sold out at 46,010, and that allowed us to make a small profit of 3,372 Rand. So not a big profit, but again, in line with hitting singles, which is what we've been doing most of this year. That's another single in the bank. And now I basically sit net short, in a sense that that option structure is still there, and it runs out until the 15th of September, so it's got about 3 weeks to go. And if the market breaks below 45,000 at some stage between now and then, well, then we're sitting quite pretty for that.
Although I suppose the worst thing that could happen at this point is that, no, it's not the worst thing, but it would be really irritating if the market just went nowhere, because you know, you want to hit a 4 or a 6 at some point for the portfolio, and I suppose you wouldn't even get a single if, I suppose, at futures closeout, which is when, 15th of September, we ended kind of where we are at the moment. Yeah,
if we ended where we are at the moment, then we'd lose our premium of 891 Rand. So it would be a pity in the sense that we've had this structure on for a while, and we'll end up making no money in that case. But what I might very well do is actually look to roll this structure forward into the December futures closeout period, because I still think that overall this market structure to me does look vulnerable to a potential break to the downside at some stage. If it's not now, between now and the September futures closeout, I won't be that surprised if it happens sometime during the fourth quarter of this year. And I'd like to have that protection in place, irrespective of whether it's now or into the December futures closeout period.
Garth, you're not putting on any trades for the portfolio this week. Is it partly reticence because the market is looking a bit soggy, but kind of not going anywhere? And I wonder for you as a trader, whether that's quite a frustrating period, a total lack of volatility. Although early in the year, when it was very volatile, everyone was complaining bitterly about the volatility. So, you know, where are you at the moment?
Yeah, look, the total lack of volatility at the moment is frustrating, but I think you've got to just take that and say, well, markets do this sometimes. I haven't been particularly active while there's been no volatility around. And I'm quite happy to sort of sit back. The market will present us with opportunities again, but I'm not going to force trades if there's nothing that's really jumping out at me and worth doing. So as things stand at the moment, I'm quite happy to just sort of stand back. We've got this option structure on if the market should move to the downside. If the market rallies, well, then we're not really going to participate, but I'll just have to take that on the chin then. But I think, broadly speaking, the backdrop that I've painted here still gives me reason to be cautious on the whole.
Okay, Garth, so what does the portfolio look like, given that there hasn't been too much activity and, as you said, having hit a single last week?
Yeah, so we hit a single with this SA40 CFD, and you can see we sold that out at 46,010. So we made 3,300 Rand in profit on that. That's been closed. Now, the only position that we've still got on at the moment is this option structure, and you can see the 4 different legs of that structure there. Currently, we've paid a premium of 891 Rand for that structure. If the market goes below 45,000, then we sit in a very good position. If it doesn't, well then, c'est la vie. We just have to kiss that premium goodbye, and we'll look out to the fourth quarter then. But in terms of our portfolio, it's sitting up 16.5% for the year to date still, so 291,000 Rand in the bank. That means we've made a profit of 41,000 Rand for the year to date from the starting capital that we had. So, you know what, I think it's okay. And you mentioned it would be nice to hit a 4 or a 6. Absolutely, I'd love to. But also when you've got really good bowlers bowling at you, sometimes you've just got to take the singles. And this year hasn't been easy. So it's a bit like facing Dale Steyn on his best day. You kind of just got to be happy when you get a single.
Garth, and any of the recent trades that you've closed out for the portfolio, and I was thinking of DRD Gold the other day, are you quite happy with the positions that you took and then exited, given what's happened subsequently to some of the shares?
Yeah, so there's 2 trades that have been interesting. The DRD Gold, we made good money on that, and thank goodness we sold when we did, because it came off hard yesterday on the back of the results. But then the other one that we had recently was Truworths, where we were short, and we got stopped out of that short, and then the results came out last week, and the share got absolutely thrashed. It was down 8% on the day.
I thought of you that day.
And I looked at it and I thought, well, you know what, sometimes you need a little bit of luck in this game, and the luck wasn't in our favor that time. But, you know, we did well on the DRD. So I suppose it swings and roundabouts.
Yeah. And then just lastly, just remind viewers that they can subscribe to a weekly update from you.
That's right. We've got a free email list that viewers can subscribe to, which gives you a heads up on what's coming up on the show every week and what trades we're doing. So if you go to traderscorner.co.za, you can go into the middle of the page there and you'll see there's a link for a free weekly email. Go and click on that, and that'll allow you to then register for that email. And we won't spam you. You'll just get an email once a week on a Tuesday telling you what's coming up on the show for this week.
Okay, great. We'll leave it there. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner is brought to you by IG.